We're in Boca Raton, Florida at the GAIM Hedge Fund Conference talking to managers about their strategies and their outlook for the industry. We're now going to talk to one of the few women at the conference, Ginny Parker, who is CIO of Parker Global Strategies. Very good to talk to you.
Thank you very much. It's great to be here.
You certainly continue to be a pioneer, right? It's an industry that is dominated by men, as we know.
Yes.
I must ask you, when I was getting ready to come down here, I read this article about a study that showed female hedge fund managers perform better than their male counterparts. So, any idea why that would be the case?
Some people say that it's because women have better intuition. There was a panel earlier today discussing intuition, and I think possibly that has something to do with it.
All right, we'll go with it. Now, you're going to be on a panel shortly, a couple hours from now, talking about size. Does size matter? And this has been an interesting debate within the industry because some of the smaller funds are more nimble and can provide better returns in some cases. Now, where do you weigh in on that argument?
We think that size is very important, and if you think about who the large hedge funds are today, almost all of them started out small. We have discovered many years ago hedge funds who were small at the time who were some of the very big names today, and we think that the place that you find real talent is in the smaller organizations.
And is that simply because when you're managing fewer assets, you do have the ability to be a little bit more nimble?
That is certainly a part of it. People are able to really express their investment theses, and as they become larger, they are forced into larger, more liquid strategies and often really have to change their overall approach to the markets.
And when you're in those liquid strategies too, you're competing against other people that might be making the same strategic move you are then, right?
That's correct, and if we look at what's going on with some of the largest hedge funds that are in the same asset class, it's not unusual that you see fairly crowded trades.
Now, do you expect to see in the next year, just a guess, more winding down or starting up of hedge funds?
I would anticipate we may see some more starting up of hedge funds. There has been a huge reluctance for a number of the large investors over the past few years to even look at the smaller hedge funds. And I believe that finally they're going to start looking at some of the smaller funds again as for a portion of their assets. And I think that this will encourage hedge funds to start up. There have been a number of hedge fund startups who have closed over the past few years because it's been such a challenge to raise assets.
And what is the reluctance for some of these big pension funds, I assume, and endowment funds? Is it that the track record's not there, or they don't know the manager as well?
That is certainly part of it, and I think that we live in a time where it's very driven by check the box, whether the institution is checking the box themselves or they are dependent on a consulting firm who also tend to check boxes. And sadly, the smaller, newer firms, even if they have very talented people, don't fit the mold.
Mm-hmm. I want to ask you about strategy at your firm. You specialize in MLPs and the energy space. It's a fascinating time to talk about energy because we heard not too long ago the U.S. will gain energy independence. We know that there's been a fracking boom in the U.S. What's your outlook for energy, and is it still as interesting and attractive as it has been in the past, or more so?
This is probably one of the most important times ever for the U.S. energy opportunity, and we are so lucky as a country that this almost popped up out of nowhere a few years ago. When we first got involved in MLPs, studying them about 7 years ago, the U.S. energy landscape was a very different place. Today, we are a growth industry, and really the U.S. energy space is now being recognized across the world for what's happening.
So based on what we were talking about before, does it start to be a crowded trade? Has everyone discovered what you discovered a while ago?
It is not crowded at the moment, and if we look at the performance, and now I'm not speaking just of MLPs, but of various sectors within the energy space, it tends still to be fairly volatile, which keeps it from getting overly crowded.
We saw, as a group, hedge funds underperform the S&P 500. And again, it's a big group. But do you think that reverses this year, that we will see some of these strategies actually pay off for investors?
I think this year we're going to see a lot more divergence in the performance of different subsectors within the equity markets, and also divergence of performance various countries around the world, speaking a little bit more broadly than just the U.S. And I think that that is going to set a much more attractive table for the long-short equity managers.
Tell me, what do you worry about? What do you hedge against? What is sort of your concern in the backdrop of that upbeat energy story we talked about earlier?
What we worry about is not so much to do with the energy markets, but to do more with global risk. And right now, risk is, or perceived risk is very, very low in the market, unusually low. Someone said it a 6-year low now. And things can happen that will spike risk very, very quickly. And then no matter what you're invested in, if you're not properly structured for that spike in risk, liquidity tends to dry up a bit, markets sell off. So anytime things seem good, it's a perfect time to be looking behind one's back.
Do you worry about some of the broader issues out there, the U.S. debt ceiling, a possible bond bubble, U.S. economy? Are these things that you're worrying about?
I believe that the U.S. economy looks like it's getting onto a better track now. We are very, very worried about the bond bubble. This is something that could last decades as far as its impact on investors, on individuals. The debt ceiling, we believe that Congress will eventually address something a little bit more than just kicking the can down the road. I think that Congress understands that we are all very, very vested in coming up with some form of a solution.
Do you think that bond bubble is going to reverse? I mean, you're hedging against that, or do you not see that as an immediate concern?
We are not hedging against it because it's really not part of our mandate, but we try to be very, very aware of what sort of impact it may have. Now, that's not to say that something may not unfold over the next few months or over the next few years where it will be appropriate for us to have some type of a hedge.
Ginny Parker, Parker Global Strategies, pleasure speaking with you.
Thanks
so much. I'm Rhonda Schaffler. This is Reuters.